Welcome, everyone. This is really exciting. We are kicking off with another angel investing mini series. I'm Natalie, the founder and managing partner here at She's Independent. We have a lot of folks on, or some folks on live, a lot that will listen to the recording. Just wanted to kind of remind everyone this is a space where we want to make people feel welcome, encourage you all to step into or step up in your investment journey. And so, it is a little bit of kind of workshop style where I will be sharing things, but if people have questions throughout, do not feel shy. Ask the question, raise a hand. If you have the question, I guarantee you others have that question, or future others watching will have that question. So please feel free to participate, but we'll of course also, open it up for Q&A after the more prepared section, but you can ask questions throughout. So to kick this off, I'll share a little bit of my background. I know a lot of folks that sign up typically know a little bit about me, but as somebody who's going to be leading, the discussion today, I want to share a bit of my background. It's institutional finance, meaning I've worked professionally in finance across Wall Street, trading roles, private equity. I've been angel investing now for, I guess, upwards of, 15, 17 years. And really excited to, show up and work with a bunch of folks into the whole mission alignment and women-centric investing that we do at She's Independent. I have a really strong, track record and portfolio of exits. This is not by any means to sit here and say, hey, throw some money and you're going to have a 20x return like I did. But what this is to kind of introduce and share different concepts and hopefully start to get you thinking like, if not participating like an investor. The more you can learn, the more you know, the not only easier it is to step into and step up into investing, but just to allocate in a smarter, more strategic way. Or even if you're not ready to allocate, to start thinking more strategically so that whether it's taking new jobs, stepping into that next thing, thinking about writing a check, you can have more confidence when you do it. And I'd like to share a little bit about my story. We're really mission driven at She's Independent. This women first, women centric angel group. And by the way, what does that mean? We are a lot of women, but everyone is welcome who aligns with, our approach to investing and showing up, which is we know there are massive funding gaps. We know, there's massive, get power gaps that exist today in many places. And at She's Independent, we're all about supporting and saying, how do we get more of those underrepresented, folks and women into the investment arena? So it's something that is, really exciting and really powerful. Again, we're happy to take, folks with us on that journey. And we do a lot of education and mentorship along the way, such as events like this. And with my story, I came from a background where my parents did encourage and celebrate me to play in investing and play in finance and play in engineering and do these things that maybe weren't as accessible for women when I was graduating in the 2000s. That being said, we've tried to create, I think, on the whole, and in many places of this world, a path where women can say, "Wow, I can step into STEM roles, and I can be a Wall Street trader if I want." It's still not necessarily friendly in a great culture. And I do speak openly about this because I think showing up for ourselves and being able to, I love Eva. I don't know if you meant to send rocket ships, but that was great. So fun. Uh, Basically just, being able to step into that story and say, hey, this is what's powerful and authentic, that can make so much happen and really allow us to show up in a really significant way. And so a picture up on the slide is, me wearing short shorts, holding some hundreds because I had just found out I had, a big liquidity event and I was wearing short shorts. And I was like, yeah, investors can wear short shorts. Like we don't have to look like the men that did it before, right? So just ideas, things that, drive me really excited about showing up and saying, how do we teach and bring others? How do we not just, break through and get to the glass ceiling, but literally shatter it so there isn't a glass ceiling? And I actually changed this slide when I was looking at this deck, and I've presented this a number of times, but it's not just about me. It's not just about, the women tomorrow, but I am so excited to take women and underrepresented folks on this journey because of the inspiration, the way we're able to truly influence when it, comes to capital, which is so much of what drives the world we live in. In this next generation, right? Whatever that looks like, we have women in our group that don't even have capital that want to allocate in the future, and they're learning with us, and that's amazing. So it's a really powerful why, and because of that, you'll see that it's very authentic in terms of, kind of how we show up when we talk about. All right, what are we talking about today? Today, we're going to be talking about angel investing, and we're going to define it. What is private investing, how to think about it, what are the basics, what are the foundational concepts you need to know if you're going to invest and allocate as an angel. We're going to start sharing some tips and tricks and, have some discussion. Also share, well, this is why you might want to think about investing as a group and what groups will, typically offer or maybe not offer. And then we'll talk about what's next. But really today is about, setting some of those foundational concepts, maybe you establishing some of those goals for yourself. And just to reiterate, let's just look at those inequity gaps on the screen. So when you're talking about equity ownership, right, how many women are on cap tables? How many women have ownership positions? What do their ownership stakes look like? Just because there's a woman that was brought into the founding team doesn't mean she has equal equity. Just because a woman was hired, to be a senior manager doesn't mean she has, great equity compared to colleagues. So just being aware of what are these gaps, the VC funding gap, which probably everyone has already heard a bunch. It went to 3%. Now it's back to less than 2%. Less than 2% of venture capital funding is going to women-owned businesses. Let that sit with you. So what are we missing in the world, right? Anytime money is influencing the things around us, the products, whether it's consumer, women's health, the women's businesses, they're just not getting the capital. So what does that mean for the world we live in? And then board diversity, of course, right? We're not just talking about entry level or mid level or even senior level. We're talking about boardrooms, right? We're talking about investors. We're talking about people that have real influence over those organizations, where it's not just the blood, sweat, and tears, but it's decision-making rooms. And that's where we are showing up. Okay, so let's talk a little bit about, why you might want to think about investing. And my dog is participating in the background, so hopefully Zoom is filtering that out. But why do I invest? Why do people invest with me? Why might you want to invest? And these are all ideas, concepts. They don't all have to stick, but maybe it's planting the seeds. And tomorrow or next week, you wake up and say, wow, if I start thinking like an investor, that's going to change my professional viewpoint, how I show up, jobs I accept, the respect I get in the office, my strategic nature when it comes to X, Y, and Z. And so I have up here just a few examples, knowledge and tools, of course, truly reinventing your mindset and the authority you bring. But all of these things, really great concepts in terms of thinking about and planning, do I want to be an investor? And by the way, I'm going to say something else, which is not on here. Um, we've had, a lot of folks join and they say, well, I have money or I have capital. I need to feel, more confident. And the confidence thing, it changes when you do the thing, right? So you're never going to be 100% confident. But what's so fun, and I know we have some members that she's dependent on, like Dr. Edong and Rachel. You're welcome to chime in as well. I love it when somebody joins and they join and they say, I'll be on the sidelines. And they say, maybe in the next year, I'll get involved in a deal. And then they see the deals and they say, I can't not invest in this. I can't imagine not funding a business like this. And it's just so much fun, right? So what I don't even have on this slide, right, is like excitement around a deal. So there's many reasons you may want to step in, but these are just a few that we outline. And then, let's define it. What is angel investing? Because there's lots of different forms of investment out there, including private capital. Angel investment, angel investing, and the way we invest at She's Independent, let's talk about that. So first of all, what is private investing? When does it happen? When a company incorporates and says, hey, we're going to launch and we're going to open our doors and hopefully sell something, create something, maybe make a meaningful impact on the world, scale. Funding or capital, is one of the resources that is needed to allow them to do this typically. And we'll talk about that in a little bit. But with these private companies, meaning they open their doors and it's, registered maybe in their state and they have, maybe it's just, they're just an employee or they have some, contract workers, but they typically are going to be taking private capital from investors like us, like angels, or maybe from the banks, they're, taking a loan, or maybe they're, going to some other player. And again, we'll talk a little bit more about players in the race. But the point is, companies are private until they're big enough and until they have a potential or, maybe go through an opportunity where they can become publicly traded companies, meaning, you can buy stocks in those companies. You see them, traded on public exchanges. And so basically it's who is the ownership. So private company just means it is a, non-regulated, I'm talking about, I guess, in the States today, how I'm talking about this, but a non-regulated, entity, or there's some regulations they have to follow, but you can't just buy shares. You actually have to go through the company and you're, executing paperwork, deal documentation. And it's different than I'm going to go buy a share of Apple stock, right? Apple is a public company. What does it mean, or what are the requirements in the US to invest in these private deals? The term or the phrase accredited investor is something that you will hear if you haven't already heard it. And that is basically saying you need to meet these definitions as defined by the Securities and Exchange, the SEC, to, sorry, Securities and Exchange Commission, to basically, you can stomach these investments. If you lose it, it's okay. You know, it might be a full write-off. You might not have liquidity in a long time. It's risky. So basically there are these things, these guidelines. Maybe you have to be a professional investor if you don't meet, some of those guidelines as established by the SEC, but you have to meet this requirement. And there are different requirements there in terms of net worth, income. You're welcome to look at, the definitions. There are various definitions if you're, maybe an organization versus an individual investing. But basically, that is a binary yes, no. You have to be accredited if you're allocating to angel deals in the US. There are some workarounds. There's something called Reg CF, where, crowdfunding campaigns and, different mechanisms might allow you to get exposure to private companies, but you're not going to be technically, an angel on the cap table or participating as an angel investor in an investment group. You're going to have, let's say, less influence, less information asymmetry, things to be aware of. Not bad to do those things. Love crowdfunding for various reasons, but just being aware of that. The other things to note about angel investing, and we're going to get into a lot more detail on this stuff, throughout, but just quickly, I'll say these are, again, risky, no promises, illiquid, long holding period expectations. A lot of them can be write-offs, meaning going to zero. And we have a question in the chat. So we need to be an accredited investor to become an angel investor. So yes and no. So to be a proper angel investor where you're writing your checks, you're not going through crowdfunding, you're not investing in a publicly traded fund that invests in angel. To be an angel investor writing checks, yes, you have to be accredited in the US. And when we are investing as a group or as an entity or as an individual, there's documentation that's basically saying, all right, this deal, is accepting from accredited investors. And so do you meet the definition of an accredited investor? And by the way, what does it mean to become accredited? It's typically a self-accreditation. You check a box saying, I meet one of these or more of these definitions. So it's not like a test per se, but there is or will be a future in which it sounds like you can have certain educational background, in which case, if you, pass a test, you can be accredited through that. So there's different ways to be accredited, but the way that our angels typically are investing with us is they're checking a box that says, I am accredited, I meet one of these definitions, which typically is going to be income or net worth. All right, so let's go on from here and talk a little bit about fundraising. Because when you talk about angel investing and, private investing in private companies, what we're talking about as angels at the end of the day is typically capital, right? Companies need to raise capital to grow, expand, pay their, workers, maybe build the product, whatever it is. So fundraising is at the core of kind of when we're plugging into these companies. It might not actually be a, active fundraise. Maybe, we're going to invest in the future, or maybe we were past. But the point is, we're typically engaging around these fundraises. And just to define a little bit for you, and there's so much here that you would learn, in more detail if you actually step into angel. But just to define a little bit, companies will typically start out as bootstrapped, meaning self-funded. Some companies never take outside capital, and they may make a ton of money because they never, gave away 50+% to, outside investors. And then if they ever exit, not all companies do, but then all that money goes back to the team or the founding team or whoever holds the equity or ownership in the business. A lot of companies, however, and I should say a lot of venture trajectory companies, meaning we talk about venture backable versus cash flow businesses. And this is a really important thing, actually, that I'm going to define quickly. So I see a great gas station. I love the services they offer. I love that I can go there and, pick up window washer fluid. Is that a venture backable investment? Probably not. It's a cash flow business. If somebody said, actually, I'm building the next generation gas station and we're using this cool technology enablement here and we're going to franchise there and, and you see this trajectory of, wow, it could be a rocket ship, that might be venture backable. But if it's a, here's one or, two businesses and it's really about, the cash flowing and the bottom line, you're not ever going to likely see these really big valuation expansions and really big exit opportunities the way that we're seeing it within this venture backable or kind of, venture ecosystem. Right? When people talk about unicorns, billion up dollar valuations, right? That's not happening because somebody said, oh, I want to sell this cool thing and, it's going to be myself and, two employees and we have a brick and mortar store and it's only going to get so big. Venture backable is, we see this getting big. We see a big potential acquisition, a big potential, large, user base. You call it addressable market, but that's the difference. And so when you think about these venture backable businesses, the ones that we're really, keeping our eye out for as angels, they're typically going through this funding cycle that may start with a friends and family or angels, pre-seed, seed, series A, B, C, maybe goes public sometime. And these are just the standard names, the nomenclature used for these different funding rounds. In terms of equity and access, I do want to point out, right? Friends and family used to be these kind of early checks. And what does that mean? You come from a wealthy platform or ecosystem, or, you have a bunch of money in the bank account, and wow, you're in a very different place versus somebody that isn't plugged into that network. What's happening with, democratization of more people stepping into angel, right? More women, more folks of color, people with diverse backgrounds. What that means is you have more money to hopefully fund these early stage businesses and throughout maybe the early stages of their funding journey. And it's not just about the, well, who's in my family network? We have so much to talk about, so I'm gonna keep, going through. But again, questions, feel free to chime in. We will talk about convertibles. Great question in the chat. The other thing I want to say about fundraising, a lot of it's navigating cash, right? Or cash flows. We're in a tough funding environment right now. I guess right now it is January 2025 because this will be recorded and somebody may listen to it in 2 years and they're like, no, it's great. But basically recognizing, right, what does your cash flow look like? How much burn, meaning how much money are you spending every month to keep the lights on? And navigating that kind of dance of you have to have money that maybe you're getting in the door from investors and or customers, and then balance that with, what is my runway? So the fundraising process is all about this kind of dance and balance, right? You don't want to raise too much, you don't want to raise too little. Obviously, if the lights have to, if you have to shut down the business because you couldn't meet payroll, I mean, that's a tough situation. And the other thing to mention about, fundraising is we're angels. When I talk about we, our investment group, right? We're individuals that are investing and allocating. But then there's the term institutional money or institutional finance. And that means people are doing it professionally. So we'll be oftentimes investing alongside more established, let's say, players who have funds that they've taken in from outside, parties, and they are, so and so venture firm or so and so, fund that has some, maybe tight allocation strategy and mandate and writes bigger checks because it's something where they've already raised millions of dollars and they're allocating it. Whereas with an angel or an angel group, it's on a deal by deal. We're saying, okay, great. We like that one. I want to write a check of this size, but it's not some mandate based on having a fund that we are deploying. And so a few more, thoughts on these concepts around the investment ecosystem, because there's a lot to talk about here, but recognition of when you're talking to or evaluating a business, right? Where are they? What's their stage? And there's some nuance, but it's also sometimes a little black and white where somebody says, you know what? I have this great idea and I want to do all these things and it's AI, so it should be worth a lot of money. And you start to dig in and you're like, well, have do you have the IP or the expertise or the talent of who knows how to build the thing? Right. And you may realize, wow, this is pre-seed. This is pretty early, right? No checks in the door. You never want to be a first check. Well, we can talk about that later, but basically recognizing, right, where is the business? And there's different types of funding or financing. So, of course, as angels, right? That's one type. Institutional money is another. We talked, I guess, or I mentioned very briefly, you might get some traditional or maybe venture debt. Henry Wright on the call. Hi, shout out to you because I know you're looking in that realm. There's all different types of ways to maybe get funding, grants. The investors and players and recognizing who is involved in a raise in that investment ecosystem is huge. We were just talking about a deal the other day, yesterday. We do weekly deal calls. They're a lot of fun. And it was like, okay, there's the strategic, it's somebody that may want to acquire them at some point. And it was like, okay, have they invested capital? Or are they just, knocking on the door? So lots of really fun, kind of nuances there around what is the momentum? How much interest is there in the industry for this thing? And understanding things like goals and plans for a raise, significant. And by the way, we at She's Independent are really investing a lot of times in what we're calling Seed Plus. It's not technically a stage. People talk about Seed or, Series A, but there's all these kind of things in between. Seed Plus for us means we don't want to invest at the idea stage because we do like there to be some execution, but they don't have to have it all figured out. They don't have to have dollars. It's great if they do. Sure. You know what's scary though? When you have somebody with a lot of expertise and they've done no customer research and they build a thing, right? And they're like, yeah, everyone's going to want it. How many customer conversations have you had? Right? So there's a lot of questions and a lot of digging and a lot of diligence you can do, even if the product isn't built. What are your plans with the capital? Oh, you really need to hire somebody to do that specific thing? You have them lined up, they're ready to join. They just need the money. Amazing. Oh, you already gave them an equity grant and then, you're getting them cash when you close the round. Wonderful. So you can really dig into this stuff and, start to get smart. And it doesn't just have to be waiting until, they start to sell the thing. And let's define equity. And actually, hold on one second. So we got another question in the chat. Okay, we have several questions in the chat. So let's just take a quick pause. So the convertible we're going to come back to. We got a question from Henry. Why is it a tough raising environment? Can you describe the factors or circumstances around why it is so hard now? So I will say markets are cyclical, asset classes are cyclical. A lot of things correlate, meaning may ultimately, you may see trends where they're going together, but basically we went through a period of seeing a ton of, market liquidity and a ton of money going into private deals. Um, Given, I think, a number of things from you look at the stock market and the sentiment, so how people feel about allocations, um, and also how many companies maybe are, going through M&A, how many, have to, do something to kind of keep the lights on for the next year or 2 years because the activity in their sector is much quieter, it's much harder to raise. It's a little bit of this kind of beast that can chase itself. So generally it's, are you in a bull market? Are you in a bear market? The best investors, right? You're not following a trend per se, but you are a trend, but you also have to be able to time things, and you have to be able to have conviction, and you have to maybe wait for the thing to play out. So when market sentiment is bad, meaning when people don't feel good about allocating and they're kind of holding on to all their money, typically that's the best time to put your money in, right? It's this idea that when valuations are actually down, right, that's a better time to play. Similar with Angel, if it's tougher for companies to be raising, we're going to probably have better looks on deals. Deals are higher quality ultimately that are going to be raising. It's a better environment, if you have capital, but it could be harder mentally to write the check because it's a softer market. And again, with a softer market, right, you're not thinking about, ooh, it's going to be easy for them to raise. Like this has to last them maybe for 2 years. I mean, there's other things that can weigh on you if you're thinking about, what's happening. There's a lot to talk about right there. Politics. I mean, there's a lot that goes into it. Uh, so I guess I'm going to put a little bit of a pause on that, but hopefully that was a little bit helpful. I think the other thing I'll say is a lot, and we're going to get into this a little bit, but a lot of how this stuff trades or, valuations, it's based on kind of the crowd, which is annoying but true. So one person says I want to invest, and then others start saying they want to invest. It's a little bit of a, um, if no one bites, that's not going to be a successful round. But if somebody with a decent name or somebody says, "Yep, I'll negotiate the term sheet and I will set terms on this round," all of a sudden, people will jump in. So there's a little bit of this network effect too. Okay, so we got another question. Dina's saying, what percentage of angel investments that you move forward with are successful? Great question. We will talk more about kind of portfolio theory, allocations, expectations, and more detail in future sessions. I will quickly say you don't want to make one investment in angel. You don't want to make two or three. You probably want to be, aiming for something like 15 to 20. I personally have about 40. That is not something I'm expecting you all to think about or get to. I'd want you to get to 10 if you're building an angel portfolio. These are risky, right? And so the company, by the way, that everyone loves and everyone's like, oh my God, that's the deal. It's not going to work out. I'm just telling you right now. The ones that, really work out, like part of it's luck. There's so many factors, and we will talk about risk reward, all these things we look for in execution, but at the end of the day, you want a diversified portfolio. And so it's having, a dozen or so or more investments if you can. And by the way, you can back into, and we'll talk about this in the portfolio theory, session 2, 3, but what do you expect? And how do you think about check sizing and all that? So, and then what amount is a typical investment is another question we just got. So there's no standard, I would say, as an angel. A lot of times you're seeing the minimum to be something like 50,000 or 100,000, sometimes 150,000 or more. As an angel group, the beauty is you can come together. So Henry can write a check for 5. Ashley can write a check for 10. Tracy can write a check for 7,500, right? And we can all come together where all of a sudden, we're $75,000 as one line on the cap table, meaning one position that they have to manage. It's simpler for them. They love it. We're, a group of people that are very committed and excited to share, what the business does. But yeah, as an individual, it could be anywhere. For our group, I think the average is right now about $7,000 per check and $70,000 per syndication or per group investment. My personal is like 20,000 per investment. Okay, so that's the other thing. Women got to talk about money. All of us have to talk about money, and we do. So it's a lot of fun. Oh, I didn't even talk about the equity slide because we had all those great questions. Let me go back to the equity slide. So I want to quickly define, equity because I think it can mean a lot of different things for different folks. And just to be on the same page for, how we're talking about it today, think of equity as ownership. You are now an owner in that company if you have equity. You're not just an employee. You're not just a manager. You're not just getting high fives, pat on the backs. You didn't get that title. You didn't get that raise you wanted. you are an owner in the business. So if the business exits, you have participation in upside. Possibly, meaning not all companies are going to exit. Maybe there's no exit path. Maybe the company shuts down. Maybe the exit includes a transaction that devalues your equity. That happens all the time. Doesn't mean the investors don't get paid, but maybe the company or the employees don't get money on it. I'm not saying the investors always make money on these exits either. My point is, if you have equity as an individual employee or as an investor, right? You never know if you're going to actually get liquidity or, pay out on it. The last point on this slide, cheaper to give away, that's something to keep in mind if you're in the position where you are negotiating equity, which we love talking about that and we do workshops on it. Recognizing that if you are negotiating a package with a business and they say, oh, you want $250,000? We can't do that. We're a Series A, stage business, Series B, whatever it is. But, we're happy to, give you this equity package as a thanks. And if you know how to value the equity package, you're not necessarily just going to say, high five, great. You're going to say, oh, you're offering me 150,000 cash. My equity comp is only $50,000 and you can't meet me where I want on my overall comp. So actually, I'm really looking for 150,000 in terms of the equity comp, and that might get me to sign the deal. Them giving away equity comp, it's not cash. It's much cheaper. It's much more of a, negotiating item that you can, really dig into. And, I'm not going to get into it in too much, on this call because we have a lot to talk about, but just being aware that it is something that companies typically are giving away, especially these, growth stage companies, because they only have a limited amount of cash and they have to incentivize good people to work with them because people really matter. Okay, so let's talk about investment vehicles and we can address that convertibles question earlier. So on this slide, I just have up an example of different types of investment vehicles. Equity, options, shares, restricted stock units. I've kind of red bolded or highlighted convertible notes and safes because that is the typical vehicle that we are seeing in, early stage rounds when we are allocating. We also are investing in priced rounds, meaning there's a share price and you're getting shares. But because convertible notes and safes are what we are more often seeing in this environment and for early stage, that's why I highlighted it. There are, of course, other investment vehicles and instruments in, private markets. I put even royalties on here. You can think real estate. There's many different things you can invest in. And by the way, there's a lot of nuance to what that investment vehicle looks like and how to interpret. And there's a little bit more we'll explain later. But let's talk about equity for a minute. Equity is not just somebody saying, here's 30,000 shares, but it's really understanding, well, what does that mean as a percentage of the business and in terms of the valuation? So what is it worth? Right? I don't want to know, great, you're offering me 30,000 shares for this advisory role or this, role at company, XYZ that you're offering me. I want to know what is that worth based on the last valuation. And we're not going to spend a ton of time on this, but just be aware there's language, right, around companies hiring any employee, key employees, advisory, and board members, where if they're offering or giving you equity, there's typically a cliff in a vesting schedule. As an investor, when you write a check, you're immediately vested, you immediately own it. There's no cliff. A cliff is basically saying if you leave before, we fire you before XYZ date, right? Typically a year, you get nothing. If you're beyond that year date, then you start getting ownership, the vesting schedule. Maybe over 4 years, you can vest or, get ownership in that position. And what is the cap table? The cap table is just a term to describe or refer to who are the owners of the business. What is the capitalization? So it may read, She's Independent Investments, Syndicate 1 LLC, 2%. And we might have written a check of $75,000 to get there. What was the valuation? $75,000 divided by 0.02. So just thinking through, right? Like what does this stuff mean? And it's okay if I'm planting the seeds and it doesn't all make sense today, but really important to, start soaking up this information. And people always ask what drives the valuation. And truly, it is a story It is excitement, sometimes mania. It's market sentiment, as I mentioned to Henry's question earlier. Size or stage of the business, maybe the team. I just saw a business and they're interesting and we're actually looking at them. They're raising a priced round, meaning they're raising at a certain valuation, not even a, safe or I'm not going to get into all the logistics, but the fact that they're raising a priced round as a pre-seed or seed round on the back of some execution, but light execution is wild, but they've had previous exits. They're a substantial, legitimate business. They have a great deck, great team, great demo. So really, a lot goes into what drives the valuation, but at the end of the day, just think supply and demand. There's a fun movie about GameStop. I think it was on Netflix, right? And the retail traders and people that made and lost tons of money. I'm not going to expand in more detail on that slide, even though it's a big one. So you can also read about things like tulip mania, meaning one of the first asset bubbles. It was actually on actual tulips, right? The plants, the flowers. Um, but let's give you an example of, ownership. If you invest, if you're investing early, right, the revenue, or I should say the multiple expansion, the valuation expansion is extreme. So if I invest $10,000 on a 6 million post. That's a term for, the fundraise where it's the money or the valuation after the money that was raised, is in that pot. I have 0.16% of the business, also called 16 basis points, which if they exit at a $500 million valuation is $833,000 or an 83x. If I invested that same $10,000 on a 30 million post, right? So 6 million versus 30 million. You can see the difference of what my exit looks like. It's a 17x. So when I say that we're, focused on this seed plus stage, it's not without risk, right? You invested a company that's a 6 million valuation. That's probably a lot riskier than a company that's trading at a 30 million valuation. But the opportunity for returns in this example of, what the exit is, you can just see the difference. And there's a lot more to talk about here. Again, this is just to provide, some examples. We would get into a lot more examples talking about dilution because likely there would be additional funding rounds. Plus, there's costs if you're investing with an angel group, right? You want to see how all that plays out. So in later sessions, we'll talk about some of that. So here, what ownership might you expect? And this is just to get you thinking. We're not going to spend time on it. If you're stepping into maybe a board role, an advisory role, a senior executive role with a startup, what can you expect? Or if you are not yet an accredited investor and you're stepping into equity, because you can. You can't write a check as an angel, but you can step into equity through a company or through an advisory relationship, right? So things to think about. And the more you think like an investor and the more you learn these things, the better position you'll be in to negotiate, of course. I'm just having a few terms up here just to show you another idea or to further kind of get you thinking about, what's a valuation. We invest all over the place, even though we invest early. Sometimes it's a 10 million post, sometimes it's a 5 million pre, sometimes it's a 30 million post. Again, these are terms where if you're either adding or not including that amount raised in the in that bigger figure, pre-money versus post-money. So pre-money means you're not including the amount raised, post-money means you're including the amount raised. So maybe a 9 million pre and they raise a million, right? 10 million post. I have a few other terms on here. Safes are a form of convertible, a simple form of convertible, I should say, with kind of industry, accepted standard definitions. And there can be changes, but basically, a lot of these companies that we're investing in, because it's a cheaper and, more convenient way to raise, we may invest and the terms may not be about a price round, meaning they don't know what it's really worth, but they may say, well, your terms are you become an investor and at the next priced round, meaning when we do have a valuation on it, we're going to cap you at 7.5 million. So if it actually is worth 12.5 million at the next round, wow, you get quite a discount. Or the safe may say you're going to convert at 20% discount, meaning if it's, 10 million at that valuation, you're basically getting in at 8. So again, this is some more advanced stuff, just talking about it very briefly just to get, the wheels spinning. And when you're as a part of a group, of course you can learn these things alongside us learning on the deals. And we did get a question, so let me just go back. So Dina's asking, is getting a board seat come into play? Great question, and yes. I would say getting a board seat with a check, I never want to hear you tell me a company reached out, they said I needed to write a check, I wanted a board seat, so I just took it. Because there's a lot of that happening. And if you don't do the digging and the diligence to say, is this a company you actually want to invest in? I don't want you doing it. Unless intentionally you say, I want to buy this board seat and I don't care, or I really like what they're doing in mental health, or, there's some reason. I don't want you just writing a check for a board seat. We lead with writing a check because we like the business and we like the risk reward. Do we ever have a board opportunity because of it? Yes. So that's different. It's not, I'm going to write the check to get the seat, but it's, I'm excited to invest in this business. And maybe there's a board seat in the process, or maybe you negotiate that as a part of it. What I will say is venture investors. So if you're a professional investor and you're writing $1 million check, you're leading the round, you typically will require that you're getting a seat, or maybe in some cases multiple seats, depending on what that deal looks like, as a part of the funding. But angels, right? We're not writing the vast majority or taking, a huge part of ownership in the business. And so you don't necessarily have as much pull on that. But if you are a good, smart, insightful individual that wants to support the business, you absolutely can throw your hat in the ring. And we do have people in our group that have stepped into not just board roles, but also fractional executive and advisory roles. So that's also something that we're excited to support. Okay, so I am going to, I know we have still a good amount, so I'm going to move on a little bit. Some tips in hacking success. Navigating into equity before you're accredited. You can do that. People do it all the time. You can absolutely write checks through things like, crowdfunding campaigns. Just be aware, right? It is negative selection, meaning if you're not actively, proactively, really plugging in and looking at a bunch of deals and learning this stuff, like really getting your hands dirty, it's going to be really hard to step into high caliber investments. And so a lot of people will tell you, if they're honest, that early angel checks typically went to zero, and to expect early checks to go to zero. I'm here to tell you, I have a finance background. My early checks, some of them really worked out well. That is not a normal thing, and that's not something to expect. But having a finance background and having a group like ours where you can really learn and invest alongside others that can help underwrite, quality deals, meaning run diligence and source really great deals. Because if you're looking at that funnel and you're only getting in a few deals and you're like, oh, this is all I have to choose from, versus we have, hundreds coming in every quarter, and we say, oh, that's really substantial. That's really interesting, right? Where do you want to invest? So just be careful about allocations if you are new to this. So the learning alongside others is huge, making sure that you're not waiting for full confidence. That never happens, but recognizing if you start to do the thing, it really will change your mindset. And we run these regular, we call them office hours, where it's an ask anything format. I have a link later that you can check out. And so if you just wanted to say, hey, tell me a little bit more about why you invested in, this or your portfolio, we can talk about it. And just a little bit about our group. There's all different types of angel groups out there. And, I just want to highlight a little bit about what makes us who we are, besides that we're very mission driven. And, I think folks join us not just that I want to feel good, but they also realize we do really quality deal making. We've created this environment in this ecosystem where, and I'm going to answer a little bit of Dina's question, really good question in the chat as I share this with you, but we've basically unlocked and created this framework and environment where all folks can jump in and be a part of deal leadership. We have some of the deal leaders actually on this call right now. So I'm not sure if they're still on. I think they are, but I can only see so many faces. But Dr. Edong is an example. Will show up to biotech conferences. She'll meet companies. She'll, be able to screen companies and talk about healthcare companies in a way that Rachel and I, even though we know a ton about deal making, we won't necessarily know as well because healthcare, biotech is her realm, right? Or we may have folks that, say, well, I studied finance or I studied VC and I want to start to learn the thing. And we've created these frameworks so that we can actually scale our funnel and what we're doing. In diligence, by the way, we have frameworks and we have, things that we've put together that are proprietary to us, but we're really big on that mentorship and that bridging the gap so that others can step up and everyone can be, a part of influence and making decisions here. So it's not just, well, Natalie has a track record and she thinks this. Earlier in our journey, there was a little bit of that. And I love that we are opening up the gates and it's really about influence from all. And, I think the other thing to think about is, and this is the last point I have up on the slide, we are investor friendly. I am very open about this stuff. I am not making money right now and she's independent. Why am I telling you that? Well, we're doing awesome deal making. We're making incredible strides, but I'm not sitting here saying, how do I maximize the money that I get out of people that join this group? We are saying, how do we make an awesome, sustainable, impactful business doing incredible deals? How do we launch more folks that have not been on the cap table? And how do we launch their angel journeys and get them to step up to write more checks? Because that is changing everything, right? That is changing the world we live in. That is changing the space that we, collaborate in, our community. I mean, it really is everything. And what I mean by that, by investor friendly, is if you start to ask and really dig into the questions and say, well, what are your fees? And do you have a management fee? Do you have expense fees? What is the syndication fee? What is the carry fee? They add up. Be aware, right? Know this stuff. And you don't have to join our group. You don't have to join anyone's group, frankly. But there's really great things about being in a group and just being aware of asking these questions. Are you getting taken advantage of? Or are you getting taken along on this awesome ride to become an incredible angel and do incredible things? And so just some really, key things to think about. There's a lot more, by the way, in terms of what I just said, because I know some of those terms may not make any sense, like carried interest. And so you can, of course, ping us afterwards. I'll have some resources up as well. But in terms of how we operate, and this answers also one of the questions we just got, we're continuously deal sourcing. Incredible job done by Rachel Mehta, who's leading our weekly deal calls. Weekly deal calls. Anyone can join. We're talking about deals. And wow, I love it when somebody says, well, I didn't have this background and I didn't know that I could do the thing. And now I'm doing the thing and it feels great, right? We do regular pitches. We do a ton to make sure that we're underwriting or finding good deals so they're aligned enough. Hey, maybe it's not women owned. Maybe that we don't see diversity on the founding team, but is an amazing business. And is that a culture and a team we can get behind? And do they care about representation? Are they bringing people into the boardroom along that journey into executive roles in that business? Or do they just want to be a bunch of white men? And I don't mean that in a bad way, right? Like, I shouldn't say that. I don't mean white men can't do the thing. And we've invested in white men. But when we do, we are making sure that these companies are investing in culture, investing in women, investing in a way that we can get behind. Henry, great question. What's unique about our screening, attributes, frameworks, and processes? Honestly, and I will say this, and you can quote me on this, and I'm going to sound like an asshole. I sometimes do. I'm very honest. I've never seen another angel group operate as we do at our caliber. I didn't just say angel sounds cool. I'm going to start a group. I didn't just say I want to maximize what I can get out of what people are investing through us to put that in my bank account. Great question, Dean. I'll answer the fees in just a second. So our frameworks were, I have a finance background. Every time somebody joins us and says, hey, we can make this a little bit better. Ariane joining us and saying, hey, we should do this operationally. Rachel saying, hey, we missed that last time. We should do this. Dr. Edong saying, well, maybe if it's healthcare, we should do this other thing. And it's not perfect. There's infinite questions that you can ask in diligence, in deal making, right? But we're doing a really good job. And the quality really shines through if you look at the types of companies that we're investing in, that are pitching us, that are in our ecosystem. And the other thing I'll say is not all angel groups even run diligence, right? So talk about having diligence or not having diligence, pretty binary. And some, might just say, well, this sounds really interesting. Professional investors sometimes don't do good diligence, but we are doing diligence, even as an angel group. And we're also sharing carry, meaning sharing some upside with the people in our group that raise their hands and they help us with those journeys. So Dina's question is, what are our fees? So let's talk about that. So to be in our angel group, and I'm going to, oh, perfect. That's literally the next slide. So to be in our angel group, there is a membership fee, but we do things where you don't have to be a member to come to some of our events. If you said, hey, Natalie, I need session 2, 3, and 4 of what you're about to run, I can't pay for it, I'd say go check out our YouTube. We have some freebies up there covering more advanced concepts, even though when we do it live, it's going to be better. But you could go get some, some more freebies on our YouTube. If you're in our angel group, you literally get access to, those weekly deal making sessions, so much more guidance and mentorship. And what are the fees? There's the membership fee, which is an annual due. We may turn it to monthly. It's $375 a year if you're an observer. You do not need to be accredited. It's $950 for the year if you're an investment member. You have to be an investment member to allocate. You do not need to be an investment member to do all things deal making in terms of being a deal leader, stepping into calls, navigating diligence, all that. We also have what's called an investment couple or household. Maybe it's sisters, mom, daughter, two dads, whatever you want. And in terms of the other fees, carried interest and these other deal fees, which typically are not so transparent, let's talk about them, you need to know about them. There's what's called a syndication fee. So if you're coming together as a group, you basically have to form a legal investment vehicle. And by the way, we get into this in more detail in later discussions. So I'm going to make this very brief. But again, in later sessions of this, we will talk about it in more detail. But our fee is roughly half other investment group fees to syndicate, which is substantial, right? Ours is $4,000. We may actually have to move it to 5 for sustainability long term, but others are charging 8,000 plus. There's carried interest, which means as a group, right? She's independent, will get a piece or portion of returns for all the work that we do. And we also share that carried interest, what's also called carry, with folks that have stepped into leadership on that deal. So let me give you an example. Tracy sources the deal. Henry leads the screening call. Dr. Edong runs diligence. They would all get a cut in what's called the carried interest, meaning a piece of that upside if they act as deal leaders and we invest in that deal. Our carried interest is 18%. 18% that we're also sharing with Tracy, Henry, and Dr. Edong in that example. A lot of other groups are charging 20, 25, sometimes 30%. So again, these things stack. We have no quote unquote management fees. We're also not professional investors, even though, I've been on the professional investment side. If an angel group is charging you management fees, I would say, watch out. Professional investors, they're going to charge some amount, maybe 2% every year on assets under management. Again, I'm going to skip over this stuff, but the point is be aware of what those fees are. Okay. So let's move on from here. And just quickly, I'm going to show you the portfolio slide. You can check out companies we've invested in. Just added a few new logos, which was really exciting. We actually had some press today on one of our most recent investments, which was a medical device to help, I shouldn't say help, improve efficacy, or I shouldn't say efficacy. Gosh, language is escaping me, but basically to improve the delivery when patients are experiencing shoulder dystocia with birth. So 1 to 4%, they're saying roughly 3 to 4% of these births, so maybe 4 million or so births annually, you experience shoulder dystocia. And this medical device, which is going through, different types of, trials and whatnot, is the first of its kind. It's been a manual technique that, people have been doing because they didn't have a device for it. So this was a company we just invested in that we're very excited about. So press went live today. Feel free to check it out on our site. And we have a bunch of other companies up here as well. Our deal flow, a lot of it's women owned, a lot of it's diverse owned, or I should say we want more that's diverse owned, but really excited to step in to say, not enough money is going to these businesses. What are we doing about it? And then just wanted to have, a quick reminder again, this stuff is risky. You do not want to say, this is my life savings. I'm putting it all in Angel. Maybe you do. It's up to you. I had a wealth management team that told me, Natalie, why are you allocating so much in Angel? And why are you writing $15,000 checks? You should only do checks of 50 or more and, don't allocate as much. By the way, they're not my wealth manager anymore. Um, it's really important to step into influence and recognize what do you want to see in this world and what do you want to do, right? If all of us say we're going to put some money towards these amazing businesses that aren't seeing the light of day, but these products are needed, these services are needed, women's health needs to be studied, that changes everything. So it's up to you kind of how you want to step into this. I'm not saying everything goes to zero, right? You can make really good decisions here, especially alongside, others that have been doing it. But just reminders for you, excuse me, that this stuff is risky and you don't want to expect a return if you invest. Negative selection, meaning don't wait for somebody to knock on your door and say, I need money. Be proactive, plug into groups like ours, plug into alumni groups, plug into networks so that you can find good deal flow. It's huge. And of course, expect great community and learning. And if you want to get started, right, determine your path. There are angel groups out there like ours. There's alumni networks. You might have networks, through your professional groups that you want to get involved with. What is your risk tolerance? Don't just talk to your wealth manager, but talk to your financial advisor for sure. Talk to your partner if you make financial decisions with somebody, but don't just rely on them, right? Don't just rely on other people. It's fine if that's how you want to start, but you're not going to really be able to step into deal making or really be able to establish yourself as a deal maker if you only rely on others. It's a really important one. And it could take years to establish yourself as a deal maker. That's fine. Maybe you never feel fully confident. That's fine, right? But just start doing the thing. What are your goals? And you can map a path to it. And honestly, even just joining something like this, I mean, you just participated in what was arguably a pretty insightful, maybe, interactive dialogue where we're getting great questions. I mean, this is a part of your journey. And so, in terms of what's next, we have regular office hours. We're running several more of these angel investing workshops. And so we invite you. It's free for our members. There's a cost if you're not a member, but of course, if you have questions, we'd be happy to hear them. And just quickly, I'll say on, what's next up with the Angel series, we're going to talk in a lot more depth around things like what should your portfolio maybe look like? How do you want to think about risk? What are the expectations after the check? What happens? What is my accountant going to get for me? What do I need to file every year? Am I going to have an exit? What's QSBS? Do you know there's literally zero taxes for these US investors that satisfy qualified small business savings, tax code requirements. So you can have these like big exits and have no taxes up to 10 million in gains. Crazy stuff, right? So really, really fun stuff that we'll talk about in the, coming weeks over these sessions. They are recorded. We, of course, strongly suggest or, like you to engage live if that works for you, but join in office hours. We hope to see you at some future sessions. And up here, we just have our membership email if you want to check it out. Our Instagram, which of course posts some fun stuff, including today's press release. And that's what I had prepared. I know we're a little over time, so sorry for that. I know we got some great questions. But if you have any more questions, happy to hang out a little bit as well.